Hi, I'm Bill Moore, and I'm on a mission to bring alpha to your trading through the power of relative value analysis. If you're looking for more candlestick patterns, then go look somewhere else. But if you're ready to start trading like a professional, then stick around. So today we made a basket, a very interesting basket. It's only got 8 products in it. It's ETFs of the US market indexes. So typically these things are so highly related to one another that there's hardly any edge. But I think we found one this time that looks pretty good. So I ran it, of course, with only 8 products. I ran it with no filters to start with, so we have all of the potential things to look at here. But then when we run it with a 0.8 correlation, 0.8 RW coefficient, 3 winners. So in any case, we have some things to choose from here. The one that we're going to look at today, though, is SPY versus VTWO. This is, of course, the S&P 500 ETF versus the Russell 2000 ETF. So large cap versus small cap products. A very strong correlation, a very solid 0.808 RW coefficient. And it's got an expectation value that's bigger than what I would have anticipated. So 4 winners in the past. So we're going to take a closer look at this one. And the picture is actually quite nice, right? It had a big move here, got outside the second standard deviation, didn't quite get back to the mean before it turned around, but is back out in that same kind of area. So it looks to me like, even though we might not target the mean, or it's going to be close, but still it looks like a time to put this trade back on. The quick and dirty back test shows that it has a perfect track record. So each time it's been outside the second standard deviation, it has returned profitably to the mean, except of course for the one that's currently open, which is the one we're going to trade. So this looks pretty good. I've already added it to the observe page. And the only thing that would suggest that perhaps you should watch it for another day or so is the fact that it's had 3 up days in a row, and it's right at the height of where it's ever been before. So certainly we would prefer it to be beginning its trek back down towards the mean. But let's keep a close eye on this. This looks like a very good trade to me. Let's watch it, and if it looks like it's starting to come back down, I think let's put this trade on. Let's take a look at the hitting probabilities. So a good strong mean reversion, looks nice. Let's run the simulation. So of course it's a short, and the current price being 17.18, let's say, it's saying that we will be below that 87% of the time. And that's a good solid number. If we're targeting the mean, which I don't think the mean is the right number to target. I think the right number to target is going to be somewhere closer to 6 or 7. But if we're targeting the mean, it says we're going to get there half the time in 60 days, and the mode being 35. Let's run it with a 7. See what we get. So with a 7, which is like I said, I think closer to what I would be looking at for a target. It's got the numbers are much nicer, right? So 36 days, half the time it returns all the way to 7, and the mode being 15 days. So I think we're going to make this the recommendation. I'm not going to target the mean. I'm going to target something a little higher than the mean. But let's go back and take a quick review. It's got a nice picture. We're talking SPY versus VTWO, a ratio of 2.18. It's got a great correlation of 0.97, a very strong RW coefficient, 0.80 or 0.81, let's say, a perfect track record. Everything looks good. This is the recommendation of the day. SPY minus 2.18 of VTWO. It is a short, so for every share of SPY that you sell, you're going to buy 2.18 shares of VTWO. Good luck with your trading.